Welcome to the Canada Mortgage and Housing Channel. It's Monday, May 12th, 2025.
Good morning.
And we're diving straight into the latest happenings in the Canadian housing and mortgage markets.
That's right.
Our mission today really is to give you a clear picture of the key trends, potential shifts, what we're seeing across the country right now.
Yeah, and we're drawing on some very recent reports and analyses, everything from the Bank of Canada's new financial stability report to regional real estate data, key economic indicators.
Right, trying to synthesize it all for you.
Exactly. Give you that essential overview of what's actually shaping the market today.
Okay, let's get into it then. Starting with the big picture, the Bank of Canada, they dropped their 2025 financial stability report, May 8th? Just a few days back. It sounds like they've got a few things on their radar. What jumped out at you first?
Well, the big flags are definitely rising household debt and the sheer volume of mortgage renewals coming up
Yes.
in 2025, 2026. They're explicitly calling these out as, significant risks.
Significant risks. Okay.
Yeah. And while they do say most Canadians have been resilient, there's definite concern for households, particularly in those high-price regions, and also some businesses carrying a lot of debt.
Right. And it's not just domestic issues, is it? They mention global trade volatility, too.
Oh, absolutely. That's a major concern for them. It really highlights why they want financial institutions to keep strong capital buffers.
Preparing for bumps in the road, essentially.
Precisely. They pointed specifically to, the unpredictability around U.S. trade policy as a potential source of instability. They want our institutions ready for any sudden shocks.
Okay, let's zoom in on those mortgage renewals you mentioned. The report says about 60% of outstanding mortgages are renewing in the next couple of years. That's huge.
It's a massive number. And the main thing is higher payments for many.
Because of the rate hikes over the last few years.
Exactly. Especially for those who locked in those really low fixed rates during the pandemic, they're facing a noticeable jump in costs.
Even if rates have eased a bit recently.
Yeah, even with that moderation. The BBC analysis suggests most renewing borrowers will still see increased payments. The gap is just too large from those pandemic lows for many.
So quite an adjustment for household budgets then. What are people likely to do? Cut back?
Well, the report implies many will probably need to tighten their belts on, discretionary spending, or maybe dip into savings to manage these bigger payments.
On top of other debts people might have.
Right. They did note incomes have grown a bit and there's been some asset accumulation, but it won't be easy for everyone.
And it's not hitting everyone equally, is it? The report flagged households in trade-sensitive industries. Why them specifically?
The core worry there is jobs. If the ongoing trade situation negatively impacts those sectors, you could see job losses or income cuts.
Which makes absorbing a higher mortgage payment much, much harder.
Exactly. Significantly more challenging.
Okay, what about the banks themselves? The BBC seemed pretty confident about the big ones.
Yes, that's a key point. They explicitly said the major Canadian banks are strong. Healthy capital, increased loan loss provisions, stable funding. They seem well prepared.
Okay, but I thought I saw something about medium-sized banks showing some early stress signs.
You did. That's the distinction. Medium-sized banks might serve slightly different markets, maybe high-risk borrowers, or be more geographically focused.
Right.
And the BEC has seen a more noticeable uptick in mortgage impairments, mispayments within those institutions compared to the big guys.
So while the system overall looks solid, there might be pockets of strain showing up. What about overall delinquencies?
Still low historically at the major banks, but, and this is important, they have seen recent increases.
Okay.
It suggests some borrowers are definitely starting to feel the pinch from higher rates and living costs.
And the bank does stress tests, right? Simulating bad scenarios. What did those show?
Their tests suggest the large banks could handle a pretty severe 26% drop in house prices and still remain solvent, above regulatory requirements.
Okay. That sounds reassuring on the surface.
It is, in terms of solvency. But it's crucial to understand, even in that scenario, credit losses would definitely increase, especially on consumer loans and commercial real estate.
Right. Solvency doesn't mean no pain. And if household stress does get worse, what happens then? Could banks tighten up lending?
That's the potential risks the BBC flagged. If households struggle more, banks might tighten lending standards.
Making it harder to get a mortgage or a loan.
Exactly. Which could reduce credit availability and, further dampen housing market activity. It's a potential negative feedback loop they're watching closely.
Okay. Interestingly, the overall debt to disposable income ratio actually dipped slightly. Does that help much?
Well, it's encouraging, sure. But the BBC remains cautious, mainly because of the trade war situation.
Ah,
Their concern is that trade issues could still hit jobs and incomes, making it harder for some to manage debt, even if the overall ratio improved a bit. A lower ratio doesn't help if your income drops.
makes sense. And the bank's monetary policy report, didn't it paint a scenario about a prolonged trade war?
Yes, scenario 2 in that report was quite sobering. It showed how a long trade war could really weaken the Canadian economy.
Putting pressure on households?
Significant pressure on indebted households, potentially leading to more mortgage defaults, falling property values, especially hitting recent buyers and people in trade-dependent regions.
And smaller banks more vulnerable too, they said?
They did highlight that increased vulnerability for smaller banks in that kind of scenario.
Okay. That gives us a good, if somewhat concerning, national overview from the Bank of Canada. Let's shift gears now, look at some specific regional markets. Calgary's house flipping scene has been buzzing, hasn't it?
Oh, definitely. It really stood out. Bank of Canada data showed nearly 7% of homes bought there were resold within 12 months. That's way higher than other big cities.
7%, wow. But is that pace sustainable? Sounds like it might be cooling off.
That's the indication now, yeah. April data from the Calgary Real Estate Board showed more homes for sale and actual sales dropped 22% year over year.
Okay, so more competition.
Right. Which means flippers probably need to do more than just, basic cosmetic stuff now. Maybe more substantial renovations or sharper pricing.
It's interesting that migration into Alberta helped prop up Calgary's market, even with rising rates.
Absolutely. That influx of people from other provinces definitely supported demand, including for flips. Plus, relative affordability compared to BC or Ontario, a younger population, no land transfer tax. Factors like that made it attractive.
So what's the general feeling now? Balanced market?
Seems to be heading towards a more balanced market, yeah. But which many see as healthier, actually. Better equilibrium for buyers and sellers.
And are flips still selling?
Some are.
Yeah.
Quick renos near the university still move fast, apparently.
Yeah.
But older places with just superficial updates, they're sitting longer now. The buyers have more choice.
Okay. Let's head east a bit to Edmonton. It keeps getting highlighted as one of Canada's most affordable cities.
That's right. Consistently up there, usually just behind Regina. The home price to income ratio is much lower than many other big cities, like 4.61.
Plus, Alberta generally has higher wages, right?
Exactly. That combination makes Edmonton pretty attractive from an affordability standpoint.
And what about first-time buyers there? Any insights?
Interestingly, yeah. Realtors there reported that many first-time buyers they're seeing lately seem quite well qualified, often with larger down payments saved up.
That's good prep. But wasn't there an issue with low inventory earlier in the spring?
Yeah.
Leading to bidding wars?
Yes, there was a shortage right at the start of spring. It did lead to some homes selling over asking, and some buyer fatigue setting in from facing that competition.
Okay. And the rental market in Edmonton, also affordable.
Similar story. It's considered one of the most affordable rental markets among major cities, too. Average rents are quite a bit lower than, say, Toronto or Vancouver.
So for affordability in a big city, Edmonton's a strong contender. Okay, let's swing out west. Metro Vancouver. The story there seems to be economic uncertainty weighing things down.
Yeah, that's the main narrative. They're directly linking uncertainty from the recent federal election, the ongoing U.S. trade tensions, to potential downward pressure on prices.
Suggesting sellers might need to adjust expectations.
Exactly, to entice buyers who are feeling a bit hesitant about the economy.
And the April sales numbers seem to reflect that hesitancy.
They did. Sales dipped compared to recent years, while listings actually went up. That's not the typical spring pattern where usually everything surges together.
Right. So even though interest rates have come down a bit, those external worries are maybe overriding the usual spring lift.
That seems to be the assessment, yeah. The trade situation, post-election uncertainty, those are the key factors cited. And inventory. Apparently it's at an all-time high right now.
Wow, all-time high. Is that across the board? Condos, too.
Condos seem to be slowing as well. Reports say it's taking longer for them to sell, and maybe more telling, investor activity in the pre-sale market has dropped off significantly.
Why the drop from investors?
Just a more negative outlook, apparently. Less optimism about future price gains or rental income potential right now.
So does that make it a buyer's market in Vancouver this spring?
That's the general consensus, yes. High inventory, lower rates. It presents opportunities for buyers who are ready.
Have prices actually dropped much yet?
Not dramatically across the board, it seems. More like stagnation. But there's talk some developers might offer slight adjustments on new builds just to move inventory.
And a bigger market rebound might need more than just housing fundamentals to change.
Exactly. Experts are saying political and economic stability, especially on the trade front, are pretty crucial for confidence to return and activity to really pick up there.
Okay, let's move back east to Ontario. Despite some price softening and more listings, it sounds like buyers are still largely on the sidelines.
That's a really striking finding from a recent poll. Over 80% of Ontarians said they likely won't buy this year, even with more choice and slightly lower prices.
Wow, 80%. And the main reason is still affordability.
Affordability remains the biggest hurdle for most, yes.
And the GTA specifically, what did April look like there?
Average selling price down 4.1% year over year. New listings were up over 8%, but actual sales down a hefty 23.3%.
So cooling demand, rising supply, classic signs.
Definitely paints that picture.
And similar to Vancouver, economic uncertainty is a factor in Ontario too.
Absolutely. That post-election uncertainty, the U.S. trade relationship, they're being cited again as contributing to buyer reluctance there as well.
Even spilling over into the cottage market.
Apparently so. Our RE/MAX report suggested potential cottage buyers are hitting pause, partly due to U.S. tariffs impacting confidence.
Interesting. How are cottage prices doing overall?
Nationally, a slight rise is projected, maybe 1.8%, but Ontario's market has stalled. Price declines expected in about half its recreational areas. Places like Muskoka, Niagara-on-the-Lake are leaning towards buyers' markets.
Any exceptions in Ontario?
Northwestern Ontario, actually. That's looking more like a seller's market, with prices expected to increase. So regional differences even within the rec market.
Okay. What about the Central Lakes Association of Realtors region, LAR? They reported some positive sales trends.
Yeah, they're seeing sales trending up across their area, attributing it to spring buyers finally jumping in, and more active listings are giving buyers more options.
Does more choice mean lower prices there?
It seems to be contributing to lower average prices compared to last year in many parts of the Calgary region, yes.
But it wasn't uniform across their whole area, was it?
No, definitely a mixed bag. Hastings saw sales up, prices down slightly. Prince Edward County, prices up significantly, sales stable. Northumberland, prices up, sales down, listings way up. Durham and Kawartha Lakes, sales and prices down, listings up. Peterborough, sales down slightly, prices down, listings up notably.
Okay, so very localized conditions.
Very much so.
And Killiar mentioned wanting to work with the new government.
Yes, their CEO emphasized advocating for housing attainability policies. That remains a key priority for them.
Okay, now let's look at Toronto's rental market. Sounds like some relief for tenants lately.
Yeah, this is pretty interesting. Average rent for apartments and condos has actually been declining for over a year now.
A whole year. Wow. Leading to incentives.
Exactly. Some landlords are offering things like a month of free rent to attract tenants.
And the drop downtown has been quite steep.
Reportedly, the average one-bedroom downtown is down nearly $400 a month from its peak back in October 2023.
What's driving that?
Several things, it seems. High supply from new condos hitting the rental market, maybe reduced demand from international students due to policy changes, and just general job market uncertainty playing a role.
Are people changing their living situations too?
There are reports of that, yeah. Some moving back home, getting roommates, or moving further out from downtown to more affordable parts of the GTA.
And rents outside Toronto are doing differently.
Interestingly, yes. While Toronto rents are down, some areas outside the GTA, like Niagara Falls, are apparently seeing slight increases.
So for Toronto renters, this might be a good time, but perhaps temporary.
That seems to be the feeling among realtors. Maybe a window of opportunity through this spring. But they still advise tenants to be prepared, have applications ready.
Right. And finally, just a quick note on Waterloo region. Slow spring start there.
That's the gist of the update, yes. The typical spring momentum hasn't quite kicked in there yet compared to some other areas.
Okay. We've covered a lot of ground regionally. Let's pivot back to some broader economic indicators influencing all this. April job numbers came out recently. What did they tell us?
Well, the job growth was modest, especially after a pretty steep drop in March.
Okay.
Some economists see this as maybe an early sign that the trade tariffs are starting to weigh on the economy. Plus, the unemployment rate ticked up highest since November 2024.
Were the job gains widespread or concentrated?
Pretty concentrated, actually. Mainly in public administration, likely temporary election hiring and finance real estate. but manufacturing and wholesale retail trade saw declines.
And wages.
Wage growth still fairly modest.
So a weaker labor market picture overall, does that increase talk of a Bank of Canada rate cut?
Yes, definitely. That combination, softening labor market, perceived tariff impacts, is leading to more economists expecting a rate cut, maybe as soon as the June 4th meeting.
Some are saying tariffs are already biting.
Yes, some economists are quite blunt, saying the tariffs are already taking a material bite out of the economy.
And we've got more data coming this week, right? Housing starts, permits.
That's right. Key housing data like starts and permits will give us insight into construction trends, plus the Bank of Canada's Senior Loan Officer Survey that tells us about business lending conditions.
And resale market data, too.
Yep. Existing home sales and the Teranet National Bank House Price Index for April are also due. So a more current picture of the resale market is coming soon.
There was also that report about a surge in mortgage impairments in Q1 2025. What do we make of that?
That's a significant one to watch. A sharp increase in loans where payments are seriously overdue. It really raises the question, who is falling behind? Is it mostly homeowners or investors?
We don't know the breakdown yet.
Not from that report. And without that detail, it's hard to pinpoint the exact issues or solutions. It definitely warrants close attention, though.
So overall, the outlook still seems tilted towards more cooling in the housing market.
That seems to be the general consensus, yes. RBC, for example, recently cautioned the downturn might worsen before it gets better. They see the trade war as a major drag on buyer confidence.
Clarity on trade needed for recovery, essentially.
That's what they emphasized. Clarity is needed.
And Toronto's market is drawing some historical comparisons.
Yes. Reports noted the average price dipping below $1 million, and sales volumes are apparently at levels not seen since the 1990s correction. Plus, inventory remains high.
Okay. And one last point, a concerning note about job prospects for recent graduates in Ontario.
That's right. A report suggested Ontario isn't currently the top province for grads finding jobs in their field, compared to places like Quebec, Saskatchewan, and Alberta.
Something with potential longer-term implications.
Could be, yeah, for attracting and retaining young talent.
Well, that brings us pretty much to the end of today's deep dive into the Canadian housing and mortgage markets for Monday, May 12th, 2025.
We certainly covered a lot of ground. From the Bank of Canada's warnings about stability risks to all those different regional dynamics and the growing shadow of trade tensions.
Yeah, the key takeaway for you, our listener, seems to be a landscape marked by quite a bit of uncertainty right now. We're seeing shifts in buyer and seller power in many places, and there's a real potential for more economic adjustments ahead.
So it's probably wise to really consider how these national trends, but also those specific regional ones we discussed, might impact your own financial plans and any housing decisions you might be thinking about.
What stood out most to you from all this, and what questions does it raise for you about where the Canadian housing market might be headed next? We really encourage you to think about that and dig deeper into what matters most for your situation.
Thank you for joining us today on the Canada Mortgage and Housing Channel. We'll be back soon with more updates.